Good evening and welcome to the Russell Journal. I am Russell and this is your nightly update for Wednesday, January 12th, 2022. Today in the market's closed with the indexes all up. The Dow Jones up 0.51%, the S&P up 9.91%, and with the NASDAQ ripping up a wild 1.41%. Right now, going at the end of the day, things look bullish for tomorrow, except for in the after hours, trading is fairly flat along the major indexes. Markets have been selling off, had a massive pullback over the last few weeks. Things have been definitely very, very turbulent, and yet, there's more turbulence yet to come. Today, however, things looked very positive. One of the things that happened is we had a bond auction today, wherein basically the buyers of bonds essentially called the bluff of the Fed. Right now, it's speculated that the Fed will have to raise rates 4 times this year. The most accurate and wide consensus of things is that the Fed will actually be raising rates 3 times, but now that's being updated to 4. And today in the hearing for Fed Jerome Powell's confirmation of his reappointment, he did say that he is expecting to no longer stimulate the economy, unwind the balance sheet. However, he did not announce whether or not they plan on selling the bonds that they're holding, or whether they plan on just letting them run out. In either case, selling would be bad overall, but letting them run out is also going to be okay as well. Nonetheless, it doesn't really matter. Okay, so going into this week, tomorrow, the big thing that we will be keeping our eye on is the CPI data, or the Consumer Price Index. This is going to give us probably the most accurate representation of what's going to happen with inflation and what's going on with inflation, and whether or not the Fed will be able to raise rates. Now, it is probably right now, if things are looking up, if the stock market is up, it's rebounding up very high. There's a pretty good chance that they're planning for the CPI numbers to actually be either in line or to be good, or at least good enough. At the very least, they keep trying to call the peak for inflation. Just in the off chance that they're wrong, I bought a very, very, very cheap put on IWM to see if just in the case they're wrong. Whatever. In the case they're right, there'll be plenty of time to get into a better position into a long position. But in the off chance that they're wrong, we'll see a gap down in the pre-market, and you'll miss the ride. So I just took a spot in early, just in case. See what happens, and it only cost about $25, so it's not a big, deal to me. All right. That all being said, there are a couple of things that we need to address right now. The very first one is if you are out there and you're trading, I can't enforce enough how much. First of all, this is not easy money. It's not free money. This is a lot of work. A lot of work goes into this. Learning technical analysis, learning how to use different indicators, and then developing and understanding a macro thesis, and then how that thesis shifts within the moving landscape of markets, market sentiment, and just the mechanics of how things in the market work. Okay, I can't overstate how important that last part is, the macro thesis. If you're looking to get into trading, or new to trading, or interested in trading, your end point for you is to develop a macro thesis. This is what's going to allow you to anticipate directional changes in the market. Okay, so this is pretty important stuff. However, if you're new, most of your focus needs to be on screen time, watching the market, watching the charts, learning the indicators, learning your chart patterns, and learning to formulate and just use a normal trading plan. All right. That being said, we are going to go ahead. What we're going to do is jump into our technical analysis for tomorrow and sort of get an idea as to what we think is actually going to happen. And so here we go. All right. Again, you can see I have my put over here, cost me $7 on that screen, but we're going to jump right down. We're going to look at the S&P. Okay. Right now, the S&P came down. It broke above this descending trend line. It dipped just a little bit below support, bounced up. Okay. Now we have a new sort of resistance spot. Notice the wick of this candle, and notice the body of this candle got all the way up there. Okay. So right now, what will happen is what we're going to look for is we're going to switch this. Okay. We're going to switch this line. We're going to move it. Okay, we have a new trend established on the daily chart. Okay, we're moving up in this direction. In the event that the price falls below and goes down below this line here, below the diagonal line that I drew, this will show us that the trend is broken, and we'll look for further move to the downside. All right. You are, however, something that's been brought to my attention through a few other guys. We are definitely still in a macro level bull market. The market is still very bullish. The economy does appear to be healthy. We have record unemployment. And so there are some guys who seem to think that this is the beginning of the end. We have reached the peak of what this economy can do, and that we will need to see, there's two possible things. Either A, the Fed does raise those interest rates and send us into a full-blown recession, which will be really, really challenging, or they don't raise those interest rates, but they still tighten a bit of policy, which will make the rate of growth simply slower. Right now, most of what we would say is probably going to happen is I'm betting that they won't get us a full-blown recession. They'd have to be pretty foolish to do that, but it's possible. And it's all going to depend on how bad that inflation data is tomorrow. Okay. And keep in mind that they'll probably have that adjusted for autos. And one of the things we know is that the auto index, the used auto index, has started to pull back. So there's a good chance it will be better. Like I said, just in the off chance it's bad, I'm definitely holding one very, very cheap put. All right. Okay, going into IWM, we're looking at this chart. Again, I've got my regular lines for you guys that add new ones every day because I trade every day. Going into this, I do apologize a little bit for my voice here. I've been sick the last couple of days, and that's why I've missed some episodes here. Okay. Again, you have, so if we look at it here, if I zoom in, you're looking at this candle here. This is today. You can see how it pressed right up against our support resistance line. Okay. We can roll back over here and we can look for the move where we had this move up, where this spot right here originally was resistance. We pulled back, we broke above it, right? But we've struggled to stay above it. However, it does keep getting pulled back up there. So there is a lot of demand to keep this above that 217.30 level. Okay. And that's definitely a real point of contention for this thing, is passing right through here. So there's been a fight for a whole year into this area as to what it's going to do, push up or go lower. We need to see this break up, and we need to definitely see, we've still got the 50 above the 200. So there's, it's still looking pretty bullish. If we push up and we see this 6 or the 9 cross back above the 200, there's a pretty good chance we're going quite a bit higher. So you could go very bullish very fast, especially if that CPI data does come in really, if it comes in a lot lower, if we get, 6%, only 6% inflation or something like that, there's a pretty good chance she's going to rip. Okay. Because it means that the Fed will not be able to raise rates so much. All right. Stepping into the QQs. Okay. Again, same story here. We've got our support resistance lines. I drew these for people on the daily or on the 1 minute charts. Again, you still got support that could have acted as resistance. That failed. We can get rid of that. That's not going to be a problem again. Okay, but you can see that we did have that same sort of thing. Resistance over here, and then came down, touched 200, but immediately got sucked back up over the top of that resistance line. Again, we'll be constantly looking for that thing to hold up as far as things go. Again, the NASDAQ QQQ is going to have a lot more work to do. I'm going to say that based on, so if you see these lines, this dotted one up at the top, this is the 15 EMA. Okay. It's touching the 50. Now there's a chance it could bounce up tomorrow off of the 50, but that's going to be a lot of work and take a lot of capital to move that. Now, I'm not saying we won't get that in, but it would be a lot easier if they drag this under the 50, right? What they have to do is drag this 15 closer to this 6. And it's easier to bring it down. It takes less money to move the average down and then bring the 6 back over the top of it than it does to bring it up. So there's a good chance that we'll either A, be slightly down and sideways tomorrow, or if that inflation data comes in and we have lower inflation than in November, then we will be seeing some really, really great, you'll see a pretty powerful move up, and that could blow the 6 up through the 9, 15, and 50 right there. If that happens, look out. You'll be seeing some all-time highs coming back, and it'll happen really, really fast. You'll see this move up, probably bang 404. You might see the single greatest day on the NASDAQ in a long time, okay, or a couple of days. There'll be some work to do it, but they're looking for a place to put some money, especially it being the beginning of the year, January effect, blah, 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 all the stuff we've talked about before. All right. Okay. Couple of other things to look at is TNX, I'm sorry, and TLT. We kind of look at these bond yields. Again, you can see these bond yields came up last couple of days. Today, they started pulling back. And this is where people who have bonds are saying, yeah, we don't think those interest rates are really going that much higher. Okay. You've got this move down here. It's not a super crazy move down. It definitely is holding the 6. It could continue up, depending on how many more people can short the bond market. They might be able to drive interest rates up or drive these yields up if they do manage to find any more locates. So we'll see. Same thing. You can also see that, the TLT, the 20-year, or this is TYX, I'm sorry. This is the 30-year, which shouldn't be moving all that much. It really doesn't do that. And okay. Last one to really look at. Interesting thing today. We saw the VIX above 20, came back into 18 range. Below 18, things get very, very bullish. So I would say with like this stuff here, right now, the market is really getting a pretty good picture that things are headed in an upward direction, that inflation really is transitory, and the Fed won't actually be able to back off and do any rate raises. We can look one more. I should probably check out for y'all. This one I've got goofy. I was all over the place on this chart. I'm sorry. Let me just do this so that we can really see. Let's do this from scratch. Okay. So again, I'm just holding an insurance policy in case. All right. So this is Apple. You can see we've been on this long climb up. So we're really, if you want to learn technical analysis, here you go. Okay. We look for these flat spots, okay, where it seems to flatten out, or places where the price seems to stop. Okay. So you can see all of those are pretty clear as in support areas. Take a picture of that if you want. I don't care. All right. So some of the other things that you want to see are what's obviously what's resistance. That's resistance. Let me draw a resistance line. So you got resistance, strong resistance at 180. You've got a peak up there at 182. I'm sorry, I got to get a little closer to the screen. As far as like what's going on, we did bounce off of the 50. We've got the 6 and the 9 headed back above the 15 EMA. So looks like we're heading in a strong upward direction now for AAPL. In the event that it breaks down, I would say look for support to become resistance right here at 164. You can see a $10 move down in Apple. That's actually not a really big deal for that stock. It runs around all the time. And then, yeah, look for a break above that 180, and you'll see that 183 probably. I've seen it in the after hours get a little higher than that, and then from there, you'll have to do a Fibonacci extension to see where it can go above that. So that's a look at what's going to happen tomorrow. I would say based on how the market behaved today, they're obviously pricing in good CPI inflation or good inflation data or positive inflation data. Just in the event that we're shocked over something, okay, then I'll lose $27. That's fine. I'm willing to risk that. But other than that, I hope you guys all have a good night. For the Russell Journal, I am Russell, and I'd just like to remind you guys, no matter what, to respect your risk.